Okay, so gold, right? Big topic these days. And you, dear listener, you sent in this analysis from Gold Predictors, published right after the U.S. election on FX Street.
Hmm, interesting.
The title really caught my eye. Gold corrects from target zone post-U.S. election amid geopolitical shifts. Kind of sums it all up, doesn't it? Gold was doing great, hit that predicted price, and then, bam, a dip right after the election results.
Yeah, that's what we're going to dive into today, right?
Exactly. Let's
Yeah.
unpack all these forces at work, how global stuff is shaking up the gold market,
Hmm.
and what it all means for, well, you.
Absolutely. And I think it's fascinating how gold prices often reflect deeper anxieties, about the global economy, about the political landscape.
Mhm.
It's like a canary in a coal mine,
Oh, I like that.
signaling shifts in investor confidence, global power dynamics.
So it's not just numbers on a chart. It's
Yep.
about the story behind those numbers.
Exactly.
And this story starts with a pretty big shakeup. Trump back in the White House,
Big shakeup.
and with him, a renewed focus on deglobalization, protectionism. These were big themes in the article.
Yeah, right. And the article points out how these policies, they're creating uncertainty in the market, but to really understand why this sends investors running to gold, we need to unpack what these terms actually mean.
Okay, let's do it.
Let's imagine a world where countries are less connected, trading less with each other. That's essentially deglobalization.
Okay, so less global cooperation, more like everyone for themselves.
Right, yeah.
And protectionism. What's that all about?
Think of it as countries putting up walls to protect their own industries, often through tariffs.
Okay.
Now, while this might sound good on the surface, it can disrupt the flow of goods and services globally, leading to price increases, potentially slower economic growth.
So a recipe for instability.
Yeah.
And historically, when things get unstable, what happens?
Investors, they seek safety. And that's where gold comes in. It's been seen as a safe haven asset for centuries, a store of value that tends to hold up even when other investments are tanking. Makes sense. And this article gives some great examples. The uncertainty around tariffs, fears of slower global growth, potential inflationary pressures, these all push people towards gold.
It's like that old saying, when in doubt, buy gold.
Yeah.
But there's another layer to this story, right? The article mentions China's growing influence.
Yeah.
On the world stage, I mean.
Exactly. What if, as the article suggests, this trend of deglobalization combined with strained U.S.-China relations leads more countries to align themselves with China? This shift in global power dynamics could have a significant impact on the U.S. dollar.
And how does that tie back to gold?
Think of it this way. If the U.S. dollar, which has been the dominant global currency for decades, starts to weaken because of these geopolitical shifts, gold becomes even more attractive. It's a hedge against currency fluctuations.
Because gold is priced in U.S. dollars, a weaker dollar makes gold relatively more expensive for international buyers, so they're more likely to invest in it, driving up the price even further.
Right.
Okay, so we've got deglobalization, protectionism, China's rise, and the article also mentioned another geopolitical hotspot, the Middle East.
Oh, yeah. Remember earlier this year when tensions in the Middle East flared up? Gold prices went through the roof. It's a reminder that gold is highly sensitive to geopolitical risks.
For sure.
Any escalation of conflict in that region, or even uncertainty surrounding the U.S.'s role there following the election, will likely send ripples through the gold market.
So we've got, what, like 4 major things all swirling around at once, impacting gold prices. It's almost like trying to predict the weather with a dozen different storm systems forming.
And speaking of predictions, let's delve into the technical analysis part of this article. Remember how it mentioned gold hitting that target zone of $2,790 to $3,000, then dipping after the election?
Yeah, I always get a bit lost with technical analysis. Feels
Yeah.
like a secret language sometimes.
I understand. Think of it as like reading footprints in the sand.
Okay.
It's about looking for patterns and signals in the price charts to try and anticipate where the price might go next.
So what are the footprints telling us in this case?
Well, for starters, there's this fascinating pattern on the weekly chart called a cup pattern. Now, it sounds simple, but it actually holds a lot of weight in technical analysis. It suggests that even though there was a dip after the election, the overall upward trend for gold is likely to continue.
Okay, so a little dip, but still heading in the right direction.
Yeah.
That's good news. But the article also mentions something about gold predictors, issuing a buy signal to their premium members at $2,650. What's that all about?
This is where things get really interesting. That buy signal was based on gold bouncing back up after hitting the 50-day moving average, or 50-day SMA.
Refresh my memory. What's that again?
Imagine drawing a line on the chart that represents the average closing price of gold over the past 50 days. That's the 50-day SMA. It helps smooth out the daily ups and downs and gives you a clearer picture of the overall trend. Gold predictors saw that bounce off the 50-day SMA as a bullish sign, indicating a buying opportunity.
And it sounds like they were right, because the article mentioned their members made a $27 profit per ounce. So even with all this uncertainty, there are people making money from gold's movements.
Absolutely. But here's where we need to inject a note of caution. While the long-term outlook for gold looks promising, the market is currently what we call overbought.
Overbought. Does that mean the price is too high?
In a way, yes. It means prices have been rising very rapidly, and there's a good chance we might see a short-term correction.
So it's like gold's taken a big leap forward, and now it might need to take a breather.
Exactly. But remember, a correction doesn't mean gold is doomed. It just means prices might come down a bit, potentially offering a better entry point for those who believe in its long-term value.
So it's like gold is on this roller coaster ride right now, and we're trying to figure out the best time to hop on. But how do we know what other factors to consider? This feels like a bit of a guessing game.
Well, it's not entirely a guessing game. Remember, gold is reacting to real-world events and economic conditions. So in addition to technical analysis, you'd want to keep an eye on things like inflation rates, interest rates set by central banks, and even the overall sentiment in the market.
So like, we're handed this treasure map to the gold market, but we still got to figure out when and where to start digging, huh?
Yeah, I like that analogy. And remember, just like any treasure hunt, there are risks involved. Investing in gold isn't a guaranteed path to riches, right?
Right, right. And it's always wise to diversify. Don't put all your eggs in the golden basket, so to speak.
Wise words. But even if you're not ready to invest in gold right now, just understanding its connection to geopolitics and economics can be incredibly insightful.
Yeah.
It's like a window into how global events and anxieties translate into market trends.
Almost like learning a secret language, the language of gold.
Exactly.
Once you understand it, you start to see connections everywhere.
You do, and it can make you a more informed citizen, a savvier investor, and hey, maybe even a better dinner party conversationalist.
Now, that's a skill worth investing in. But speaking of connections, let's loop back to something you mentioned earlier about the U.S. dollar potentially weakening. If that happens, what are some of the other ripple effects we might see in the global economy?
Well, a weaker U.S. dollar could make American exports more competitive because they become cheaper for buyers using other currencies. But on the flip side, it could make imported goods more expensive for Americans, which could fuel inflation.
So it's a bit of a double-edged sword. And how might this impact other countries, especially those that rely heavily on trade with the U.S.?
Well, it could create opportunities for some countries to increase their exports to the U.S. But for countries with large debts denominated in U.S. dollars, a weaker dollar would make those debts more burdensome.
Ah, so it's this complex web of interconnected consequences. And this is where understanding goals comes into play, right? Because as the dollar fluctuates, gold can act as a sort of anchor, like a stable asset that holds its value.
Precisely. It's why central banks around the world hold gold as part of their reserves. It's a way to diversify their holdings and provide a buffer against currency volatility.
So for our listener who's been digging into all this information about gold, what would you say is the most important takeaway when it comes to making informed investment decisions?
I think the key is to avoid emotional reactions.
Yeah.
Don't get swept up in the hype when gold prices are soaring or panic when there's a correction. Instead, focus on understanding the fundamental factors driving the market and align your investment strategy with your long-term goals.
Solid advice. Don't just chase the shiny object. Understand the forces that make it shine in the first place.
Exactly. And remember, investing in gold, like any investment, is not without its risks. It's important to do your research, diversify your portfolio, and if needed, consult with a financial advisor who can provide personalized guidance.
Great points. So we've explored the global forces shaking up the gold market, from the U.S. election to China's rise and the, well, ever-present tensions in the Middle East. We've unpacked the sometimes confusing world of technical analysis and emphasized the importance of making informed investment decisions.
We've also highlighted how understanding gold can provide a unique perspective on global events and economic trends. It's like having a front row seat to the unfolding drama of the world economy.
And for our listener who's been following along on this deep dive, we hope you've gained some valuable insights into the world of gold and its significance in today's, well, uncertain landscape.
We've provided you with a framework for understanding how gold reacts to geopolitical shifts, economic conditions, and investor sentiment.
And now we're eager to hear your thoughts. What resonated most with you? What questions are still swirling in your mind?
Keep those sources coming, and let's continue to explore the fascinating world of gold together.
Remember, the deeper we dive, the more we discover. It's like we've given you this compass and this map, but, ultimately you're the explorer charting your own course through the terrain of the gold market.
Yeah, and remember, no two journeys are the same. Your investment strategy should be as unique as your financial goals and risk tolerance.
So as we wrap up this deep dive into gold, what's one key piece of advice you would give to someone who's, just starting to explore this asset class?
I'd say start by understanding your own motivations. Why are you interested in gold? Is it as a hedge against inflation, a safe haven in times of uncertainty, or, perhaps as a way to diversify your portfolio?
Once you've got a clear sense of your why, then you can start to dig deeper into the how, right?
Exactly. There are various ways to invest in gold. You can buy physical gold, like coins or bars. You can invest in gold ETFs or mutual funds, or you can even explore mining stocks.
And each of these options comes with its own set of advantages and disadvantages. So it's like crucial to do your homework, weigh the pros and cons, and choose the path that aligns best with your investment style and risk appetite.
And don't be afraid to ask questions. Reach out to financial advisors, read reputable sources, and engage in conversations like this one. The more you learn, the more confident you'll become in navigating the gold market.
I think that's a fantastic note to end on. Knowledge is power, especially when it comes to investing. We've explored the intricacies of gold, its historical significance, its role in today's economy, and, the factors that influence its price.
We've also highlighted how understanding gold can help you make more informed decisions, not just about your investments, but about the world around you.
So as you continue your journey through the world of finance, remember that gold is more than just, a shiny metal. It's a reflection of human history, economic forces, and the enduring quest for stability and security.
Keep those sources coming, keep asking those insightful questions, and keep exploring.
And remember, the deeper we dive, the more fascinating it gets. Thanks for joining us on this gold rush of knowledge.